Hello, hello, Baruch alumni. Welcome. I'm so glad you can join us this Thursday from around the world. We know we have folks from France and Israel. We have registrations from as far as South Africa and even Australia. So thank you so much for joining us. My name is Janet Rosbach. I'm the Director of Alumni Relations and Volunteer Engagement at Baruch College. I'm the one who sends you all the love notes, all the emails about upcoming programs and events. We in the Alumni Office steward our network of 165,000 alumni across 113 countries around the world. And are just delighted that the EMEA network was launched a couple years ago to help build connections and provide lifelong learning across Europe, Middle East, and Africa. I see many friends on today, so thank you for joining us. I am going to start with an introduction of Alex Sheikhat, who is one of our co-chairs of our Baruch EMEA network. Alex, the floor is yours.
Thank you so much, Janet. Thank you, and welcome everyone. It's great to see so many of you here together, and it's great to see some familiar faces. So thank you for joining us once again. You know what? It's a great time of the year. It's the Jewish holidays right now, and we're just in between Rosh Hashanah, which is the Jewish New Year, and the Day of Atonement, and Sukkot. And I can't think of a better way to start the new year, the Jewish New Year, with this conversation. It's a great testament to the strength of the network. We have panelists from all over EMEA. We have participants from all across the globe, and sharing these ideas. I think it's valuable. I think it's amazing that we can share this, and technology allows us to share this. And it's great to see all of you here. So please enjoy. I'm sure it will be fascinating.
Thank you so much, Alex. And I would like to introduce Christian Vlad. Christian and I met in London maybe 4 or 5 years ago, and he is one of the inspirations for this event. So Christian, can you set the stage, please?
Thank you, Janet. Hello, everyone. I'm part of the EMEA network, and after the conversation with Energy, I think it was in April or so, we're brainstorming for a number of ideas, and we put them together to discuss on various events like this. So I suggested that perhaps something with M&A, because that's what I do, corporate finance. And among the ideas that were presented, this one picked up a bit more traction. So I will be a bit biased in the call. I think just as well with Professor Zhu from Baruch, because she manages the corporate finance desk at Baruch. So feel free to ask all the questions that you feel they're related: corporate finance, M&A, mergers, acquisitions, buy, sell, capital raising, or similar questions. Thanks so much for joining, and we look forward to a fruitful discussion.
Thank you so much, Christian. Christian will also be managing the chat for questions. Alex has just asked everyone to type into the chat where you're from. We'd love to see where in the world you've come from. I'm now delighted to introduce Professor Zhu from Baruch College, who will be our moderator for this conversation. Professor Zhu, the floor is yours.
Hello, everyone. Good afternoon and good evening. My name is Yijun Zhou. I'm assistant professor at Baruch College. And also, it's my great pleasure to be with all the Baruch alumni with some EMEA connections. So before joining Baruch, I spent 4 years in the UK and 6 years in France. So it's great to see people from these areas. And today, it's our great pleasure to have 4 fantastic alumni that have agreed to be our panelists. So we have Ido Victor from Tel Aviv, and we have Rinat Jabagi from Dubai, And also we have Leonard Akwani from, I think, Paris or Geneva, and also Tony Romani from Bucharest. So let's have our panelists introduce themselves before we start the conversation today. So let's start with Ido.
Great. Thank you, Professor. Hi, everyone. Pleasure to be here. My name is Ido Victor. I'm a Baruch alumni 2010. I'm the managing partner of Viola Credit, which is Israel's largest technology investment house that is based out of Israel but operating globally. We're managing through technology investments over $4.5 billion. Within Viola Credit, we focus on the credit side of investing within the technology universe. I'm sure we'll have a lot of conversations today to give you some more in-depth on what we do here. Our operations are highly global, from Australia to the UK, to Western Europe and to the US. So we do have, very good breadth of, the current situation in the markets and the economy. So hopefully we can provide some insights there. Great to be here. Thanks.
Thank you, Ido. And let's have Renard.
Hi, my name is Leonard Ackroon. So I'm based here in Geneva, Switzerland. I work at Fortune Financial Strategies, which is a $2 billion wealth manager. We invest mostly in fixed income, I have to admit, but we do have niche strategies as well in technology and also real estate and index options, performing very well. And for me, basically, I'm the investor relations person for the company, and I reach out to the investor base across Europe. Here, obviously, there's a lot of things. I get a lot of input from these clients because they're all portfolio managers. So I'm happy to give the insight on my feeling or my pulse on the situation today.
Thank you, Leonard. Then let's please have Renata introduce herself.
Okay, so I'm a Baruch alumni from 2010. I got my MBA there. I shortly after joined a startup in New York as employee number one. We set up the company, grew it. I led the M&A in just after 2 years. So I went on to experience the entrepreneur journey several times after that. And after 15 years in tech and a decade in the startup ecosystem, I moved into venture capital. Now I'm part of a global investment community at VNTR Capital. I'm based in Dubai. We invest in fast-growing Series B+ tech companies.
Thank you, Renat. Then let's have Tony.
Thank you, Joe. Hello, everyone. This is Tony Romani, graduated from undergrad in 2004. Just saying hi to my buddy from college years, Adam Ostashevsky. I spent the better part of my past 18 years in financial services, most of it doing M&A transactions. And most recently, I shifted to private equity. I'm currently a partner in a regional PE fund, investing in small cap and growth opportunities across the Southeastern Europe region. Thanks for the opportunity to participate in this. It's really great.
Fantastic. Well, thank all the panelists for your introduction. Then, since the topic today is about investing in innovation, so let me throw the first question. So what has been the startup or the innovation climate be like in your areas? Could you give us some introductions about the overall environment of the startup and innovation? So for the panelists, please feel free to jump in.
Should I maybe start? Is that
sure?
Great. So I mean, as mentioned, so what we're currently seeing, and that's we've been seeing that for the last couple of months, is that given the change in climate and in the environment, 2021 was a year where you had a lot of capital coming in into the technology and growth companies globally, be it in Western Europe, in the US, in Australia, and of course here in Israel. Just some numbers last year, just in Israel alone, for technology companies, it was over $27 billion of investments into technology companies, over 120 billion in Europe, and close to 300 billion in the US. So a lot of tech investments. This year, the pace is obviously going down with the changes in market environments. We're seeing mostly a retreat in the more growth areas where, a lot of the investors are moving back to value investing rather than growth. So there's a lot of shift back there. On the earlier stage side, what we're seeing is continuous investments there, because these are much longer term investments in terms of horizon. So there, it's been, by the way, pretty flat over the last couple of years, and continuing during the current climate. But what we are seeing, and this is part of our business, is there's a huge shift today to companies that are looking on the technology side to continue and grow the business while not going back into the equity markets at the moment. So growth debt, growth financing through venture and growth lending is becoming a highly popular area right now, given that companies are looking to extend their cash runway in the technology sector and continue the growth without going back into the equity markets, as a lot of the companies over the last 24 months have raised very healthy valuations and need to grow into these valuations. So these are kind of the current dynamics that we're seeing in the market at the moment.
Thank you so much for your insights. And other panelists, do we have any to share?
Sure, I'll jump in if you want. Of course, here I'm based here in Switzerland, so I'm mostly seeing what's going on over here. Definitely, Switzerland has a huge innovation pole. A university like EPFL is an engineering school in Lausanne, and they actually have their engineers promote their own ideas, and they have investor days, and I have clients which have actually gone and invested in these, let's say, startups directly. There's both the technology innovation, but there's also the whole pharmaceutical innovation, where you have one of the leading leading pharmaceutical companies in the world, which are based here in Switzerland. I've also, from what I've seen in the last, let's say, the last 2 years, there's definitely 2021 interest rates were really low. We're here in Europe, we even had negative yields, and so people really the wealth managers didn't know where to get the returns from, and so they were definitely looking into spaces like private debt, and also they were inching into the whole private venture capital space. And getting excited with these new ideas, because everything was just going in the right direction. Ever since with the crisis and the COVID and everything, things have definitely calmed down a bit. Interest rates are up, and now I'm seeing a lot of people saying, well, why should I invest in some risky investment if I can get almost now 5% with US Treasuries. So it's becoming a bit more of a challenge to convince people that there is definitely more upside than 5% with this kind of innovation space. And I would say that's there's definitely a lot of things to do still here in Switzerland, but things are definitely calming down a bit.
Yeah, thank you. It sounds like the EPLFF is like the Stanford of Silicon Valley.
Yeah, here in Switzerland, definitely. It's one of the top 3, that's for sure.
Yeah, so very interesting. Thank you. And could Rinat share about the current situation at Dubai?
Yeah, so Dubai has quickly become very active in the VC ecosystem. We had 2.6 billion this year, which is like 138% increase over the previous year. We hit an all-time high, 590 deals and 35 exits in the MENA region. The most active markets that we see are the UAE, and then Saudi and Egypt afterwards. All 3 saw at least one mega deal, so 100 million plus round. And I guess the trend I'm seeing is there's a little bit of a shift now towards late stage deals.
Stage deals, yeah. And thank you, Renat. And finally, can we have Tony introduce the situation in Bucharest?
Yeah, well, actually, I want to speak a little bit about the overall investment climate in Europe, in the region, but in the broader continent. What happened is, obviously, we have seen during the COVID crisis, we have seen the governments unleash significant financial programs of all sorts. But more importantly, and what is developing now, likely it helps with this other crisis that no one expected, is the recovery and resilience plans, which the European Union is financing, but they're implemented at a national level, and they include a lot of funding in the range of hundreds of billions of euros for green and decarbonization investments. And so we have seen and digitalization on top of it. So we see an underlying difficult macro background, but the programs that are currently going to be implemented in the next 18 to 24 months do give me some hope that things are not necessarily as bleak as they look. Of course, Romania is very near the epicenter of the crisis, bordering Ukraine, with a very long border, and with access to the Black Sea, where a lot of the conflict is currently taking place, and the issue with grains slowly coming out of Ukraine. So there are a lot of things developing, but I'm not that pessimistic. Overall, we do feel strongly that NATO is prepared to defend every single member of it. And so it's just, it is a nuisance. We're not completely unrealistic, so to speak, but overall, I hope that somehow things will pass and we can go back to doing what we do best, and that is investing in the future of the continent. So overall, yes, inflation is affecting everyone. Energy prices are giving politicians and economists a huge headache. But I do not believe that it's going to be a prolonged crisis because inflation is more driven by supply and not as much driven by demand. So it's more of a supply issue. Once we pass that, we have hundreds of billions of euros going to be invested across Europe in highly sustainable and highly profitable corners of the economy, where a lot of investment is needed anyway. So I'm optimistic. Thank you.
Yeah, great. Let's hope for the best. The hope also we can resume the investor confidence in the overall market. And yeah, let's the overall environment, and now let's dig a little bit deeper into the investment itself. So let's start with a simple question. So people are curious that how do you, like investors, really look for or find the great investment opportunities or deals? So do the entrepreneurs or companies they actively look for you, or is that the investors are actively looking for them in the market? So could you share some thoughts or experience about that with us?
Sure. So I can tell you on our side, so within Viola, we have, a granular data and sourcing teams. We're highly thematic in terms of where we want to invest. And a lot of the work is done around, we're long-term investors. I mean, the investment horizons for us in the technology space, is a 10-year horizon, right? So we when we looking at, underserved markets and disruptions around areas that we believe that would, have an impact over the 10 years horizon, that is where we do a lot of the work. So we have a research team doing a lot of the thematic work there. Once we understand where we want to invest, we have sourcing teams that are building this heat maps around, the companies and where they're at in terms of stages. Through our brand and network, we either get approached. So for us, over 70% of transactions are actually inbound. So we have, more demand and then, we need to approach out. But the investment process is more about, selecting the right companies that meet our investment criteria, which we have worked internally on. But definitely, we do reach out, we do talk to companies. There is also internally a team that works with entrepreneurs and residents around areas which we believe there's not enough, companies that have been founded, and we do form companies within, our internal ecosystem. In addition to that, we have built, robust databases that we're monitoring across the globe through the network that helps us understand where companies are being involved and in what areas, which helps us in terms of, the deal flow for us on the investment side.
Interesting. And any other experience to be shared?
Sure, I'll mention the way it happens here in Switzerland. Obviously, if you're a big brand, people come to you. But then what happens here in Geneva and in Zurich and in Lausanne is that you have a couple of actors that organize roundtables. And these roundtables, most, I would say that the startups have to kind of finance it to be present. But they get to come into a forum with maybe 200 or 300 potential investors, which are linked to the private equity space, and hence are able to actually pitch. And there's quite a few of these things happening almost on a monthly basis. And it's a great place to be able to network and to make sure that people know that you exist.
Right. Seems the network is really a key.
We had an event very much like that last week in Dubai. They called it speed dating for startups. So they had invited, 50 plus different venture capitalists, and they had 11 or 12 startups. So, our company sat at our table, and then the startups would just pitch. They'd have 5 minutes, and then they'd move on to the next table with other VCs. And we had a sheet that ranked them, how likely are you to invest from 1 to 10. And then that company that organized the event did a really good job afterwards in putting us in touch with the startups that, we had interest in. So that was the first time attending an event like that, but I think it was a good concept.
Yeah, it's a really good concept. It's quite similar to the dating market. Yeah. So very interesting. And one follow-up question about that. So after seeing so many pitches from different startups, so what do you care about most when deciding whether to invest? Any thoughts?
I'm happy to start, but Tony, if you want to.
Yeah, let me take a swipe at that. Yeah. But let me also answer the first question briefly, if I may. I actually want to highlight what the predecessor speakers have mentioned. Networking probably is the best way to seek connections to investors. You can actively participate in the industry events, all sorts of pitches and opportunities, speed dating. Listening to our colleague from Dubai, I was thinking, how about someone comes up with a Tinder for business? That would be fun to have. But on a more serious note, since we don't, my fund doesn't invest in early stage companies. We invest in established and kind of solid companies that have predictable and recurring EBITDA. So for those companies, what we look at really is how committed the founder, because we don't really do buyouts. We do growth and some value deals, but mostly growth. And so we look for committed founders who want to grow their business to the next level, but either they don't have the capital, or they don't have the energy to do it all on their own, or usually they feel that they have reached their limits, and want some help. But at the same time, we also look at some key competitive advantages. And of course, they're logical and everyone would say that, but we are really keen on understanding what those are and making sure that the founder is aware of those and investing primarily in those and expanding and protecting those competitive advantages. So for us, those are the two clear items that we look at.
Yeah, it's a really great point. I was thinking about the product of the startup or the market fit. But you are mentioning how committed the founders are. So the human capital, or whether the commitment of the founder also matters a lot when as to whether the company can bring to the next stage. So yeah, it's a great point. Thanks for sharing the insights. And any other panelists who have any other things to add?
Yeah, so for us, we're also within my fund, investing in growth or scale ups. But I would say that most there are a lot of criterias, but the first and foremost is the team. I'd say that we're putting a lot of emphasis on fundamentals, of course, but the first thing that we look at is team. We truly believe within the tech ecosystem, with the tech companies, every day is a year. So going to this journey with these companies, you definitely will have hiccups along the way. Not everything goes the right direction, and you want to make sure that the companies that are sitting at the forefront and moving this company forward are founders and entrepreneurs that you could trust that they could navigate through that. And we were putting a lot of emphasis on this historically. When we look back at our data, where we didn't go with the right founders, this is where we had more problematic performance rather than others, and that's where we're focused a lot. Assuming of course others are in play, right? Fundamentals and market and others, but putting that aside, which you can always analyze through data, team is really the first thing we look at.
Good. A follow-up question: how big is usually the startup team? 3 or 2 or 3 co-founders, or is it the team that you are referring to?
I wanted to add to that because that was actually something I was going to chime in on. For early stage startups, a lot of investors now are looking for 2 or more founders, which I thought was very interesting. That wasn't something I came across years ago. So that's happening now. Just a tip for early stage. And then the late stage startups, what we look for a lot actually is who invested before. So we look at previous investors. Are they VCs or companies that we know of, that we've worked with, that have a good portfolio. Maybe that's not fair, but that's something we look for.
Yeah, it also matters who were the investors before and whether they are continue investing in the startup in the following round. It matters. And any thoughts and comments from Leonard?
Well, for me, I'm not on the investment side directly, since I'm more on the sales side, so I couldn't really say what we're looking for here in particular. Okay.
Yeah,
but
sure.
I can just another idea though for the startups, for anything that's in venture capital. There's another company here in Geneva called Genius.ch, written in that manner, and it's basically an incubator. Which was produced by a really large pharmaceutical company called Serono, which sold other assets. And the idea is that they have this huge building right on the lake, and in there they house teams that they believe are going to work. And it's great for these startup teams. They have a whole IR team behind them as well to get in contact with the investors. And I've heard some incredible success stories coming out of there.
Wow, that's fantastic. So we have seen a lot of incubator working very well in Silicon Valley, and glad to see that phenomenon also in the EMEA area.
Yep. Professor Zhu, we have a question from the panel.
Mm-hmm. Okay,
Xiaozhe is asking about a fading team, and that is not working investing now, and one emerging one. If we can find out briefly from the panel members, thank you. One fading team, one emerging team.
Okay, so any thoughts from our panelists?
Yeah, I'm happy to start. So I think from fading, I'm not sure if the word fading is the right, but I think there's a couple of, currently due to what's happening in the world in terms of supply chain and inflation, there's a lot of pressure put on retailers these days. So new innovation around e-commerce, which we last year looked a lot into. I think long term we're very bullish in terms of the shift from offline to online with digital innovation. I'd say in the shorter term, given inflation and supply chain issues, very hard for retailers globally in terms of innovation. So we at the moment are less focused on this area. Although historically we've backed a company that's a Nasdaq-based company called Globally, which is the leading cross-border logistics company in e-commerce, that's also backed by Shopify and others. But I think at the moment for the next year or two, that's something that we would need supply chain and inflation to stable out for that. On the other hand, we are highly focused around a lot of innovation around the financial services sector. We're truly great believers that it's just the beginning of the disruption where, the new era and new generations are not going to go into, directly into banks, but there's a lot of unbundling of services around banking, leveraging technology there. So embedded financing is a growing area for us and an emerging one. So we're focused there with around the fintech side.
And also, so following up our previous discussion about investing, like in the startup afterwards. So after we have decided to invest, then the most important thing is about the valuation. So for the valuation, I'm wondering, so valuation must be like a result of the negotiation between the startups, the entrepreneurs, and the investors. And could you tell us a bit more about this process, like determining the valuation of the firm and how much share that the investors get in return? Let's start with any panelists?
I can take this one. Obviously, valuation is always an interesting topic. What I could say that is very very contemporary to our discussion is that inevitably we expect valuations to trend downwards for the next 2 to 3 years. Obviously, if the public markets are any indication, certainly we should expect to see that in the private markets soon enough, and it has already started. But valuation, I believe, comes up from 3 sources: the intrinsic value that the company fundamentally is able to create for its stakeholders, be that shareholders or debt holders, and that is usually measured by DCF. It is also given by the industry in which that company operates, and particularly the trends in the industry. And so you can't really extrapolate, and you can't really pull a company out of its industry. It goes up and down with the industry, sideways and so on. And so for that, obviously multiples are much relevant, comparison basis. And then the timing. Timing is everything. As Bill Gross said, and everybody knows, the timing of a transaction is probably more relevant than the other 2 items that I just mentioned. Now, going back to a question that was asked, what is an emerging theme. I think that, and I thought, what will be a global theme? Incidentally, it is one that we are looking at, particularly in our fund. It is energy storage. I believe that with the explosion of renewables, the issue of energy storage is becoming just as relevant as energy production, renewable energy production, because the grids have not been set up. The current electricity grids have not been set up for renewables, and so they can barely keep up with the creation of new production facilities. Therefore, energy storage is more and more critical, and whoever is able to properly invest, and by properly I mean in the right places, and not in just any place, but if you invest in energy storage in the right locations, you will be able to squeeze a lot of value for, I say, the next few decades.
It makes sense, especially in today's age, like we are in like kind of energy crisis in many areas. And okay, so we just briefly talk about the valuation of the startups of the investments. So we usually hear the saying that the startups or entrepreneurs are always asking for a higher valuation. However, the higher valuation may not necessarily be a good thing for them. So do we have any like comments on this thing? Sure, anyone? Like
yeah, I'm sure Ido has the same thing in Israel, but they come to us with these inflated valuations and we send them back. It just takes a few months for them to recalculate and figure things out, and sure enough they do come back with lower valuations. So I don't know if that's the same thing you're seeing there.
Yeah, I mean for us, I mean so what we saw is so 2000, the last 2 years up until early this year, obviously prices have been inflated. I would say that historically, as Renat mentioned, the entrepreneurs are always looking to come with lucrative valuations, but there was other forces from the VC side that were stabilizing and finding the middle ground. What happened over the last couple of years, given interest rates were very low and investors were looking for yield, a lot of very large crossover fund and public investments have come into the tech markets and have helped to inflate prices with very lucrative check sizes, which brought the valuations up. I can tell you that globally this was a phenomenon that was happening globally. I think what's happening right now is in our opinion is a very healthy adjustment, where you have on one hand companies that have raised at very healthy valuations, but the good part is that these companies also had raised very large amounts of capital. So if you're looking today at the amount of capital that you have in the tech ecosystem, it's at all-time high. So they're highly resilient, and at the same time, the entrepreneurs understand that they need to grow into these valuations, and they're starting to understand, that there might be, an additional equity round, which would not be at the same multipliers and even at a down round, but that's a healthy thing. So this is as Renan mentioned, this takes time. It's not something that happens overnight, but we are seeing new transactions being done at more reasonable valuations. I wouldn't say all the way down, but the more reasonable valuations. In addition to that, what we are seeing is more for those in the investment ecosystem, it's more structured equity transactions, right? So more transactions that are using some financial protections to protect equity investors on new capital coming in for adjustments in valuations as needed. So it could be building what I call like the return from, bottom up rather than just putting, very, very high price. So there's much more equity investments that are structured equity investments in the market right now.
Yeah, good to know that. And so for if the entrepreneurs have raised a lot of money that have a high valuation in this round, so for the next round, they cannot have a valuation lower than that. They have to have a much larger valuation than this round. Is that correct? So to raise the next round.
So there's two options, right? It's either the companies, would continue to grow into that valuation, right? With very healthy growth rates and others. And a lot would not, but it does not mean, by the way, that these are not good companies. It just means that, they had inflated valuations, so they would need to adjust for that. And I think, the stakeholders around the tables, would need to understand that, and that's happening at the moment. This is, it's an evolution, but we do anticipate to see a lot of good companies, raising additional capital with price rounds at lower valuations. By the way, we're also seeing more and more price rounds done by internal investors that are, already in the company, believe in the company, and instead of giving, the entrepreneurs, the journey of trying to raise at the market right now, they're just pricing rounds internally, which is also happening. But we definitely will see, good companies doing additional rounds at adjusted valuations to where the public markets are.
Interesting. So any other comments about valuation? No. And so if nothing to add, let's talk about something like after the investment. So we have been hearing that what investors bring is not only capital, but also like expertise and also human capital and also network. So could you share with us what do you think that investors have bring or will bring to the startups or the entrepreneurs or the companies?
So I can share a little bit. Some of these, like here in Dubai, we have 3 really big startup hubs, 2 of which are government backed. So startups that come and either, attend the events or join an accelerator program in those hubs, there are all the big organizations, corporates, have partnerships with these hubs. So what startups can get, aside from introductions to investors, affiliates with that hub, is they also get access to some of the big corporates that these hubs have partnerships with. So that's a good way to go as well, if you're raising money and also looking to get doors open and start closing some big accounts.
Interesting. Any other insights?
I mean, from a VC point of view, a lot of VCs take an operational involvement with the startup. So they'll have, partners within the team that come from an investment background or fintech background, so they can provide, fintech startups with some operational support. That's just one example. But other VCs are very hands-off. So I think it's part of the job of the entrepreneur to be picky about who they take money from.
Right.
And a lot of investors, it's you can, if you have a good startup, that shouldn't be the main goal. It's very important what the investors can bring to the table other than money.
Right. Yeah, I have been seeing some stories that there are people of different backgrounds in the VC, like the very advanced principal engineers, and also like people with different backgrounds with finance operations. And this backgrounds, the expertise can really be like used by the startups or entrepreneurs. So if they can find the right VC to work with.
For example, our investment community has people from very different backgrounds. So we have, doctors, we have people with PhDs in certain areas, very specific areas like pharmaceuticals. We have engineers that have done, mobility and electric vehicles. So the amount of specialization that is within a team really helps when investors do due diligence, because you have someone who's like highly specialized in that particular field. So I think, that's very important.
Yeah, agree. And also, I heard that some of the clients of the startup are actually introduced by the investors, by the VCs, right?
Yeah. So for us, within Viola, we've built a Viola platform for the entrepreneurs. So we have a data team, helping companies work on their data and financials, unit economics, and others. What we've seen is that, as these entrepreneurs are building companies and growing, one of the highest obstacles is actually attracting talent and scaling with people. So we have built internally an HR function that actually works for the companies which we invested. We have over 200 companies in our portfolio, so it's a fairly, it's a very large portfolio. So we have a partner that is head of HR that's assisting companies in the recruitment process. And we also have a value-added services where, as Renan mentioned, these are industry experts globally, which the companies could tap in and get any nuanced or feedback which they need. So that's kind of an international experts network that we've built for the entrepreneurs. So we have a very robust kind of value-added platform for entrepreneurs, because as Renan mentioned, I think capital over the next couple of years, over the last couple of years, wasn't the key, right? It was who is helping and assisting the founders in scaling their business with all the obstacles that they have.
Right. That's very useful, and I think that will be very valuable for the entrepreneurs.
Indeed.
If I may, I saw some questions from the audience. Maybe we can pick some of those.
Yeah, I think Christian will select the Q&As for us.
6:55.
Okay. So we have 10 minutes or 8 minutes before you start the Q&A.
3.
Okay, yeah. So let's wrap up in 8 minutes. Yeah, a lot of questions and a lot of interesting discussions. So finally, let's just start with one simple question. So what advice do you have to give to entrepreneurs seeking investors in the near future, or do we have advice for the entrepreneurs preparing for the M&A transactions, depending on your background? Thank you.
Yeah, if I can pick on that, probably the most important thing, in my view at least, that an entrepreneur can do is to prepare the company for an investor, for a day when he won't be there. A lot of entrepreneurs obviously are used to do a lot of the functions within the company, particularly in its early stages. But if they can think and structure the organization and the activities so that they don't become a required person in the development of the team, that would certainly make it easier for any future investor. That's one thing. Also, on the other part, it is important to make an effort. A lot of entrepreneurs do not necessarily have a wide range of skills in finance, so they may not come to the table with financial experience. But making an effort to be as transparent as possible and structure the business cleanly and neatly certainly helps in any transaction with a sophisticated investor.
I believe that must be very useful advice for the entrepreneurs. Thank you. And Rina, do you have any?
Coming from the entrepreneur side and 3 exits, I'll try to keep it short. So demonstrate traction, whether it's users or revenue. That's the most important thing. More and more, I'm seeing startups bring in a second founder. That's something to keep in mind. And we discussed that, choose an investor that brings more than just money. And then the second part of your question was, how do entrepreneurs prepare for an M&A transaction? Most important thing is know your stuff. And then the second thing that I've seen happen in 2 different ways is don't keep your team in the dark. As soon as you're aware that there's a chance for an M&A, bring it to light, involve them in the deal. You can't do it all by yourself. And that would be it.
Yeah, that's very useful. And also, how long should the entrepreneurs prepare in advance for the transaction? So, like I heard that to facilitate the next round, which will happen like in 12 or 18 months, usually they will start like 6 months before. So they need 6 months to prepare for the next round. Is that estimation like?
As soon as you close a round, you start preparing for the next one.
Oh, really? Right after closing this round? Wow, that's interesting.
Yeah, otherwise you have to do M&A.
Oh, interesting. And also, Ido?
Yeah, I think, companies, it is always a very strong battle between, the effort and work that the companies are doing around growth. And at the same time, with growth, there's a lot of good things happening. But one thing that's not happening is, you're not very, very structured, right? In order. So, and at the same time, you want to also be, prepared. So I think one of the key things that we always tell the entrepreneurs is actually, to have a separate person that's kind of more internal in terms of business orientation, that would ensure that the company is scaling with very strong infrastructure, including ready for any diligence that is coming their way, and M&A and others, just so that you have a separate team or person that's kind of focusing on that, rather than someone that's trying to do everything together, which does not work for the most part.
I see. Seems like they need a CEO like to deal with all the investors, and our COO to deal with all the internal operations.
Yeah, and that's why, by the way, a lot of the tech companies, you would see probably today 3 entrepreneurs. Usually one is kind of a more business oriented, the other would be more tech oriented, and then the third one would be more finance oriented. So that 3 combinations are really helping companies scale.
Okay, yeah. So we need a CEO, CFO, and a CTO.
That's correct.
The COO and the CFO could be the same. I've seen that work out really well.
Okay, yeah. Is the chief scientist a common type of role common recently? Just curious. The chief scientist, like instead of the CTO.
I personally work with a few startups involving hydrogen, and they have PhDs and engineers.
I see.
And those are essential because they build the initial products, and they need help commercializing them.
Okay, so that's the technical support side, foundation side. Yeah, I think let's wrap up the discussion between the panelists, and then let's invite Christian to facilitate the Q&A.
Thank you, Professor Zhou. We have some interesting questions, and I'll start with Sarah Gori asking, and actually there are 2 questions, one from Sarah, one from Gulshat. We're going to combine them because they are focused towards investors. So question number 1 is, what percentage of your portfolio is in ESG? And second, what is the liquidity situation for your company VCPE for the next 3 to 6 months? I personally have noted that a number of them disappeared off the market. So those are very good questions.
I'm happy to start. So from an ESG, so we have pretty robust internal ESG policies, which we adhere to, that are evolving, from year to year. I think for us, we have a very strict policies around what we can invest and not invest, with a clear guidance towards ESG more and more. So that's a core focus within the group. We're today 20 partners within the group. That's all as part of our investment committee memos we have included from a couple of years, 3 years back. An ESG chapter for each company that we're looking to invest in. So that is at the top of our mind. By the way, on part of ESG is also, I think there was a question also around, women in tech. So just, my partner for the past 20 years, she's one of the first investors in Israel. So I was always joking that, we are ESG compliant from day one. And she's actually one of the founding members of the group. And so I mean, this is an important. So that's one for the first, and the second I think was around liquidity of the portfolio. Is that correct, Glenn? Yeah. So I mean, liquidity, is obviously there's always so liquidity, is an important component of our of our monitoring and helping companies, continue and thrive. Within our portfolio specifically, I mean, this is more specific, but I would like to say just in general, I think, for tech companies, cash is king. It was always the case. I think over the last couple of years, there was a bit of, given that, companies could raise a lot of capital, burn rates within the companies had grown to disproportionate, burn versus, the progress on the fundamental side. We're seeing that reversed, which is very important and very healthy. So companies are adjusting. Within our portfolio specifically, we've done and are doing a lot of work with the companies to ensure that they have at least 24-month cash runway. For those who don't have, there's either internal rounds or external rounds. But that's what we're seeing specifically in our portfolio. Thankfully, liquidity levels are very high, which is good for us, but that's just like specifically on our portfolio. But in general, I think on the liquidity question, that's a very, very big topic right now in all the board, all the companies or the board members of the companies. And that's, a lot of the work that's being done is to adjust for the new climate to ensure that there's sufficient liquidity.
Thank you, Ido. I think it also, I could be wrong, but I think Gulshat was also asking about the liquidity situation inside the VC. So practically, if you're running out of funds, whether you're going to be investing, closing, or so on.
So believe it or not, that's on that. There's the dry powder. Dry powder is the capital available for funds to invest. So dry powder is at all-time high for VC and for tech. What happened is that last year there was a tremendous amount of so VCs have increased the pace of investments and went out to market again in a shorter couple of years back. VCs would go back out to market every 4, 5, 6 years. Over the last 4 years, it went down to around 2.5 years. So a lot of new capital came into the VCs, and last year the amount of capital that it was for investments went to all-time highs, and then suddenly market changed, and so there's a lot of dry powder within the VC and growth equity community at the moment at all-time highs. So the fact that we're seeing less investments at the moment is not because there's no capital to invest. It's just because we're in a transition mode where there's a lot of uncertainty on where the markets would be on the other side. And so, the investors are more cautious in terms of, putting new capital out to work and they prefer, to wait until there's more clarity.
Thank you, Idor. Anyone else wants to speak about the liquidity situation?
Yeah, I think it was completely on target. I feel the same way. So lack of cash is not an issue, has not been an issue recently. We've seen what CalPERS has learned. CalPERS, the California pension fund, one of the largest investors on this planet, where they took a break from PE and VC for almost a decade, and they regretted it. So investors do take, particularly sophisticated investors, do take a long-term view. And 2024 is going to be a much better year to invest in private equity and venture capital versus 2021, because valuations will be further down the slope. On one hand, and then at our fund level, we're all about investment period. We've just started our second fund, and so we do have a lot of dry power sitting around.
Thank you for that, Tony. We can go to the next set of two questions. Actually, they go together. Yorai Gabriel is asking about the significant changes in due diligence considering the recession. And Gulshad Freshio, second question, and they go together. What are the sought after areas in technology today? So due diligence changes and technology focus.
Renat, do you want to take it?
I was just going to chime in on the tech focus for us here. Just over the last couple months, I think I'd say fintech has been quite big. Actually, fintech has been a focus in the GCC region for quite some time. Fiat, crypto, buy now, pay later. I think at this point, I've seen too many to count, but it's still quite a big focus for people. The new one that's really exciting is smart cities. I'm always curious to see startups doing something for smart cities. Saudi has this major project going on called NEOM. Anything related to smart cities goes through quick DD and then gets a lot of attention very quickly. So that's another area that we're seeing here. And then of course, metaverse. Although I think investors are a bit hesitant when it comes to meta, but if there's an angle that's really unique, like I saw a startup at the speed dating event that had an ed tech angle to metaverse, so you could use the metaverse to teach different things, and I thought that was interesting. But again, they'll have very difficulty raising money, so that's to answer the tech side.
Thank you so much for that, Renat. Any other focus on technology? Emerging Web3?
Yeah, a lot of Web3.
I think Tony mentioned something about new modes of energy storage. That is also interesting, yes? Great. Next question comes from, let's see, an interesting one geographically. I think it's us versus them. Sofia Tropaitis, the investment preference geographically, the US versus EU, considering the GDP projections by OECD and obviously supply chains and other emerging issues these days. So investment preference geographically, where should we, if we have 100 million today, same technology, same company, where should we invest, US, EU?
If I can take a first swipe at this today, and the next few months, to say the least, I would invest particularly in the UK, and then in the EU, I think valuations are a critical component of any transaction, any investment that you make. So everything else being equal, I would invest in this order among the three regions: UK, EU, and then US. Given what the US dollar is providing to kind of a wide blanket of investors, that is the safety of the Federal Reserve being a very solid institution and a very large economic powerhouse is unequaled. And so normally investors will always flock there in terms of uncertainty. But I think ultimately the dollar and the pound and the euro will restabilize to like normalized levels. EU continues to grow. Yes, the population is aging, but the US is not doing too good of a job in terms of demographics. Immigration in the US is not doing what it did for the past 3 decades. No need to go into politics there, but fundamentally, a long-term inflation. So again, this is a blip on the screen right now, but long-term inflation, in my view, will stay more closer to 1% versus 2%. GDP projections, I would take them with a grain of salt today because there's so much moving around. It's difficult to predict for more than, say, a 5-year horizon.
Thank you so much for that, Tony. I have one question for the panel. It's a simple question. Hopefully anyone can answer either yes or no. And the question is about the future of a specific country. Could Ukraine replicate the Israel success in technology in the next 10, 20 years? Ido, I know you're biased, but still.
Yeah, no, look, I think I can tell you that, there's a lot of technology hubs for Israeli companies being built in Ukraine, right? That's been for many years. It's not new, which is great. I mean, there's great universities, tech, people and students. So definitely, I think building the ingredients of a tech hub is not a simple thing to do. There's no one true ingredient for it, right? You need to feel the vibes for it to happen. It's a question. It's not just do you have the right ingredients. It's there's a lot of informal things that need to happen for that tech ecosystem. Coming out from the government side, from the education side, from the DNA of the people and others. Does the Ukraine have the ingredients? Yes. Would it happen? I do. Obviously, I do not know. If I would have known, I would just invest only there. But yeah, definitely they do have the ingredients. And I think even today, Ukraine is kind of the back, is a technology hub where R&D centers are being built for many companies, both from the UK, Germany, Israel, and others.
I'll let Renat answer first. I have a very simple and clear answer, but Renat, if you want to take this one first. Yeah. I sympathize with what Ido said, but personally, I believe that Ukraine would not be in a position to replicate what Israel has done. There's some structural and societal issues there. I would love for it to happen, but it's not as easy as it sounds. And yes, there are certain countries, Singapore, South Korea, and Israel, that managed to accomplish quite a bit in 2 or 3 decades, but it's not something that can happen easily. And the legal system is an issue, or the lack thereof. The capital is an issue, the political environment, and let's not forget about geopolitics. Ukraine is not going to move away from Russia. It's not going to teleport itself. You're still going to be stuck there. I don't see NATO going in and putting a shield between Ukraine and Russia anytime soon. So, as much as I would love for that to happen, I don't think it's going to happen. But very good question.
Thank you both. I think that's all the questions we had. We want to thank you so much for participating. Professor Zhu, Alex, please take the floor.
And thank you for the panelists for the great discussions and all the responses to the questions that we have. And we do learn, or at least I do learn a lot from the discussions. So thank you so much, and great to see you.
Alex, any final remarks?
No, I think it was fascinating. I mean, I was fascinated by this, and it was interesting, even though I'm not from the field or industry. Thank you so much for sharing this information. Pleasure as always.
Yes, thank you.
Thank you very much. Thanks, everyone.
Thank you.
Thank you.
Yes.
Have a good one. Take care.
Thank you all. We look
Bye.
forward
Thank
to
you so much,
seeing you
everyone.
again soon. Have a
Thank you,
great
Janet.
evening.
Thanks a lot for organizing this. Thank you.
Thank you
Yes,
for
you're very
organizing, Janet.
welcome.